for May amid the new pricing floors by National Petroleum Authority. Also, the cedi records mild depreciation amid lower volatility as import demand pressures persist and IMF outlook offers near-term support. A March later, the Ghana Revenue Authority takes tax education to Kaswa SME doorsteps as the authority moves for enforcement to engagement.
Oftentimes we realize that it is only those in the formal sector who are paying tax, but those in the informal sector, it is difficult for them to honor their tax obligations, especially Kaswa here.
We'll bring you details of our headlines and other stories. Please stay with us. Thank you for staying with us. Now, in a significant turn for Ghanaian consumers, the National Petroleum Authority has announced a reduction in fuel price floors effective from May 1, 2026. This latest adjustment forms part of the authority's bi-monthly pricing review, signaling a much-needed easing of the financial pressure that has gripped the transport and manufacturing sectors over the past month. There's more in the following report.
Under the new rates, petrol has been set at 13 cedis 25 pesos per litre, while diesel now stands at 14 cedis 30 pesos per litre. The most notable change comes in the cost of diesel, which is set to drop by 1 cedi and 80 pesos per litre, bringing the floor price down to 14 cedis and 30 pesos. Petrol will see a more marginal reduction of 2 pesos, settling at 13 cedis and 25 pesos per litre. The shift reflects a cooling in global crude prices and a stabilization of the cedi after a volatile period in the early April, when geopolitical tensions in the Middle East pushed Brent crude above the $100 mark. While these new rates represent a significant recovery from the April peak, where diesel hit 17 cedis and 10 pesos, prices still remain slightly above the levels recorded during the first quarter of the year. Government decision to intervene by removing selected margins from the price build-up has played a crucial role in this downward trend, though uncertainty remains regarding whether these subsidies will be maintained through the upcoming mid-year fiscal review. The National Petroleum Authority (NPA) has reminded all oil marketing companies (OMCs) that while these floors are mandatory, individual stations may add their own margins, leading to slight variations in actual pump prices across the country.
Meanwhile, in a move that has sent shockwaves through global energy markets, the United Arab Emirates announced on Tuesday that it will withdraw from OPEC and the wider OPEC Plus alliance effective May 1, 2026. The decision marks a historic break from the oil cartel and deals a significant blow to the group's de facto leader, Saudi Arabia, during one of the most volatile periods in the energy sector. There's more in the following report.
The withdrawal comes amid the devastating economic and logistical fallout of the ongoing war between the United States, Israel, and Iran. Since the conflict began in late February, the near-total closure of the Straits of Hormuz has stranded millions of barrels of oil and triggered what the International Energy Agency calls the largest supply disruption in history. The UAE is the third largest producer within OPEC, and its departure leaves the group with just 11 core members. While the fiscal increase in oil supply may be limited in the short term due to the impassable Strait of Hormuz, the political weakening of the cartel is profound. Outside of the OPEC constraint, the UAE could eventually add up to 1 million barrels per day to global markets once regional hostilities subside. This is expected to have a profound downward impact on global oil prices once regional hostilities subside.
Now, away from that, the West African-focused independent oil and gas explorer Tullow Oil has reported a sharp 87% decline in annual profits for 2025. Falling production levels and persistent delay in payments from the government of Ghana weighed heavily on its financial performance and liquidity position. Take a listen.
West Africa-focused oil and gas explorer Tullow Oil has recorded a significant drop in profitability, highlighting ongoing operational and financial pressures facing the company. Profit after tax for the year ended December 31, 2025, fell sharply to $7 million, down from $55 million recorded in 2024. The decline represents an 87% slump, largely driven by lower production volumes and delayed payments from the government of Ghana. The company's production averaged 40.4 thousand barrels of oil equivalent per day in 2025, compared to 51.5 thousand barrels per day the previous year. However, output showed some improvement in the first quarter of 2026, averaging 43.4 thousand barrels per day. Tullow Oil says it now expects full-year production to come in at the higher end of its earlier guidance of between 34 and 42,000 barrels of oil equivalent per day, including approximately 6,000 barrels per day of gas. The London-listed firm has also initiated a capital restructuring program alongside the sale of non-core assets as part of efforts to stabilize its operations across West Africa and improve cash flow amid mounting debt pressures.
Away from that, the Ghana Revenue Authority has intensified its calls for citizens to fulfill the primary civil obligation of formal tax registration, filing and paying of taxes. The Ghana Revenue Authority, through its Kaswa Taxpayer Service Center, has visited taxpayers with a sustained tax education drive, specifically targeting small and medium-sized enterprises at Kaswa.
The initiative aims to demystify tax compliance and bring the tax office closer to the local business community. Kaswa is one of the fastest growing commercial hubs in the Central region. Head of Kaswa Taxpayer Service Center, J. Boafo, indicated the GRA is focusing on equipping business owners with essential knowledge on the simplified tax filing processes and the benefits of formalization.
Oftentimes we realize that it is only those in the formal sector who are paying tax, but those in the informal sector, it is difficult for them to honor their tax obligations, especially Kaswa here. Most of the activities are informal. We deemed it fit to come to the doorsteps of our taxpayers, that is our small taxpayers, to educate them.
Officials emphasize that without formal registration, a taxpayer remains invisible to the system, hindering the state's ability to mobilize the revenue necessary for national development. To address this, Deputy Aide at the Kaswa Taxpayer Service Center, Kwame Damoasi noted the GRA has significantly demodernized its collection process, transitioning toward digital platforms that make registration and compliance more accessible than ever before.
Now we have machines. We are in Ministry, an option which allow us to register our taxpayers so that they will be in our records, and then we monitor them to see how much their business are being fed, whether they are paying, whether they are non-compliant, and those things.
Leader of pepper sellers at the Kaswa market, Lydia Kokobafo, shared her thoughts.
We know that
every country uses taxes for development. Programs such as free education and school feeding are funded by taxes. Therefore, we need to support the government. We are pleased that GRA officials are here to educate us.
By fostering an environment of transparency and support, the GRA hopes to bridge the gap between the tax administrator and the formal sector, ultimately strengthening the revenue base of the country.
It's now time to look at how the cedi is faring against major trading currencies and how some key commodities are also faring on the global markets.
On the interbank foreign exchange markets, the dollar is selling at 11 cedis 19 pesewas. It's gained 8 pesewas. The British pound is selling at 15 cedis 12 pesewas. It's gained 7 pesewas. The euro is selling at 13 cedis 10 pesewas. It's also gained 8 pesewas. However, be guided that these figures could be higher at the Forex Bureau now. On the global commodities market, Brent crude is trading at $111.28 per barrel. Gold is trading at $4,597.67 per ounce, down by $84.41. Cocoa is trading at $3,380 per ton, up by $84.
And that was an update from the Forex and commodities markets. That'll be all for business news here on VFM 92.7. For more news, please check our website at 3news.com. I am Enyonam Haligah. Thank you.